Hello, everyone. Welcome. I am Noelle Ellison. I am here to help host a speaking series, the Global Impact Speaker Series for the Center for Global Business. And I have with me Eric Clark, the CEO of Manhattan Associates. And we're excited to talk to you tonight about tariffs and supply chain. So I'm excited to see so many friendly faces out there, a lot of people I recognize, some both students and other board members for the Center for Global Business. So to begin, I'll tell you a little bit about myself. I'm Noelle Ellison. I'm a partner with KPMG, and I'm also on the board of advisors for the Center for Global Business. And I have the good fortune to get to work with IB majors and minors throughout the year. And I'd like to introduce to you Eric Clark, or allow him to introduce himself.
Great. Thank you, Noel. Thanks for having me. As Noel mentioned, I'm the CEO at Manhattan Associates. So we'll talk a little bit more about what that company is later. But I'm also a two-time Longhorn. So BBA in 94 and MBA in '04, and happy to have the opportunity to chat with all of you this evening.
That's great. So Eric and I both sit in Dallas, Texas. We have some storms coming through this evening, so we both have double fingers crossed that the storms won't interrupt our speaking series tonight. But if they do, just please bear with us. I'd like to get started here. And, we've heard a lot about tariffs in the news over the last few months. Me in the consulting business, and of course, this is at the heart of what you do. Eric, but could you just set the stage a little bit for what tariffs are, where they've come from in recent news, and maybe where we are today to get us started?
Yeah, definitely. And there's a lot to unpack there. So maybe bear with me for just a few minutes and I'll set the stage on this. So I think the place where it makes sense to start was what President Trump referred to as Liberation Day. So last year, 2025, April 2nd, you probably all remember the images of President Trump going into the Rose Garden with his big charts with all the tariffs listed by country. So on that day, he declared a national emergency over the U.S. trade deficit. And based on that national emergency, he invoked the Emergency Powers Act to impose a universal 10% tariff on nearly all imports, plus a reciprocal country-specific tariff up to 50% that was based on bilateral trade deficits that we had with each one of those countries that was on his flip chart. Since then, global trade, you can say, has been in near constant turmoil. And I would say the very next day, we kind of went into the next phase. So the very next day, I would call it the market crash phase. So that announcement that President Trump did on April 2nd triggered a sharp global equity sell-off. The US stock market crashed. We saw an unusual dollar weakness as investors rotated out of US risk assets, and that really amplified even further financial volatility. S&P 500, NASDAQ, Dow all recorded some of their largest point drops in history. Even some of the major foreign indices like the Nikkei, the DAX, and the FTSEs all fell sharply and hit some of the circuit breakers in some of those markets. So clearly that was unsettling. And then the next phase, I would kind of refer to it as the retaliation and realignment. So then you started to see trading partners, notably China and EU partners, that were signaling or even implementing counter tariff measures, right? So they were accelerating their non-US trade deals and bolstering blocks like the BRICS bloc for trading, and really nudging supply chains and alliances away from US-centric arrangements. So facing all this turmoil and all these other deals that are being struck without the US and the stock markets being down in the US and globally, the White House then announced the 90-day pause and announced that 90-day pause on all tariffs above 10% for most countries, and then layered in some exemptions around electronics and agricultural products and some strategic sectors, but still continued to use these tariffs as leverage to negotiate a few key deals with a handful of partners. Not long after that, the first legal blows started to come in. So by the end of May, the U.S. Court of International Trade ruled that all of these tariffs were effectively illegal and ordered them to be vacated. Of course, the very next day, Trump appealed to the federal circuit court, and they upheld the ruling that these tariffs are illegal. However, they allowed the tariffs to stay in place pending a Supreme Court review. We'll come back to that in a minute because you probably saw that in the news that just came back. But between then and now, what we saw happening globally was that, kind of triggered by the US really abandoning the traditional most favored nation, non-discrimination principles, and really moving to a patchwork of differentiated tariffs based on trade deficits, it changed trade everywhere. It wasn't just deals with the US, it was deals everywhere around the country. So, how did that impact the economy? Um, Independent modeling suggests that it probably cut the US and the global GDP, raised prices in the US. Inflation occurred in the US. It hurt real wages. And all of this, of course, hurts lower income households even more because they've got a disproportionate burden where more of their income is being spent on the goods that are going up in price. So all that happening, and not to, we could spend the whole hour talking about this, but let's get back to last month. So last month, the Supreme Court came back and they ruled against President Trump, right? And they said that using the Emergency Powers Act to impose all these tariffs exceeded presidential authority and said that he's got to vacate the tariffs. So, of course, President Trump was very disappointed in that, thought it was the wrong decision. And, within hours, he said, we've got a new global tariff and it's 10%. And I think, later, maybe it was even later that day or the next day, he upped the 10% to 15%. But he did this for a different reason. He used a 1974 Trade Act this time instead of the Emergency Powers Act. So this one is actually time limited. So this can only be in effect for 150 days unless Congress extends it. So again, we continue to be in periods of uncertainty that's keeping, all businesses, all supply chains, and all trading partners in this constant state of uncertainty. So that's where we are today, and that's what all of our customers at Manhattan are trying to deal with on a daily basis.
Yeah, well, that's very concise, and thank you for like summarizing that and kind of bookending it with where we started and where we are today. I remember last year, aside from the volatility in the stock market and of course the news headlines that impact us direct consumers, what about what's happening with companies, with corporate America, and how companies are figuring out how to digest or react or put into place a business plan against all of this volatility?
Yeah, I think that's the big question, right? Are companies figuring out how to react to this and make the best of it? And the answer is yes and no. And I think, if I polled our customer base, you would have more no's than yeses. And it really depends a lot on what industry you're in. So let's dig into it by industry because if you think about it as an example, if you're in auto manufacturing, um, if you're set up to where you can nearshore and move manufacturing around among different countries, there are different tariffs in different countries. So if you've got capacity to ship that, you can do that. However, as we know, it takes a long time to build a new facility and it takes a long time to set up new trading partners. So if you weren't already set up with that agility and flexibility, not a whole lot you
Mhm.
can do if you're in big, heavy manufacturing. That's pretty different than apparel. Apparel was in a different place where the vast majority of the shipments were coming in from China, right? And a lot of the apparel was being made in China. So if you think about some of the, very popular, whether it's high-end fashion or athleisure type wear, a lot of that's being made in China. Again, setting up a new factory somewhere with a lower trade barrier and getting the skilled labor and the machinery in place, that's years, not months or weeks. So again, that they had a lot of trouble adjusting to that, probably had less agility. And then maybe I'll give you one more example of kind of a standard retailer. Think about groceries or hardware, a retailer that sells a lot of other people's products, but maybe has some of their own name brand products as well. They've got more ability, right? Because they've got partners that are importing from all over. So they've got more ability to ship things and have less of an impact to their customers in terms of price increases and passing these tariffs along.
Okay. Wow. It sounds complex, and I would imagine that each industry has its own barriers and hurdles. You mentioned automotive, you mentioned retail, and then you mentioned the food industry, which all are very complex and deal with a lot of different factors. So, I mean, Eric, what do you do at Manhattan Associates that really specializes in this area?
Yeah, so Manhattan Associates has been in business for 30 plus years and always has been focused in the supply chain space. So I like to say that Manhattan has recreated itself a couple of times. It started as a supply chain consulting company and then built an on-prem software product and then later became a cloud software as a service company. So we've been in this cloud software as a service for about 10 years. And today we're recognized as a market leader across supply chain and commerce. So think of everything from, warehousing and transportation and order management all the way to point of sale of products that are, throughout the supply chain and in just about every industry from retail to manufacturing to healthcare. Think about the need for drugs to get around the country and, refrigeration of products of whether it's a cancer drug or groceries. Those are all the different things that we deal with in the supply chain in helping our customers create that agility.
Okay. And then how does that maybe apply to the clients that you serve? So if you're trying to help them get goods or create a footprint, I mean, you mentioned the manufacturing facilities that could be immovable.
Yeah.
How do you help them strategize around that? Is it around procuring products in different countries or thinking through that? Is it around shifting the manufacturing to a different country or making major investments or creating partnerships even?
Yeah, so all of the above. I would say that the companies that were best positioned for success when these tariffs hit were the companies that already had the partnerships and already had the diversity around nearshoring. And I think clearly we're already seeing these tariffs create some winners and losers. And what we try to do is help our customers figure out how they can go into that winners category. Um, and one of the things that we talk about a lot is using geography as a feature and not a constraint. So when you think about nearshore producers, and that could be Mexico is the most obvious when we talk about nearshore, but from a trade and tariff standpoint, Vietnam and even Eastern Europe can be hugely advantageous over China as an example right now. So all of those areas have picked up share from China-centric suppliers. And the companies that already had not only the partnerships and the relationships and the contracts with suppliers in those areas, but also had the software and the agility in their software to identify that and shift are the ones that were the early winners. Now we're
Mhm.
kind of at a point where people have to make that decision. Is it time to invest for the long term, or is this still a short term thing, right? Because we saw a lot of
Yeah.
companies in the beginning kind of take the approach that maybe this is short term. I'm going to wait it out, and I'm going to pass the cost on to my customers while we wait this out and see what happens. Those are kind of falling towards when I'm talking about the winners and the losers, they're falling towards the loser category because they're not creating the agility. And I think what we've seen over the past, almost a year now is that this uncertainty is not temporary, it's the new normal. And that just creates even more and more reason that companies have to create the agility in their software and their supply chains, the way they're using third-party logistics and everything in between to make sure that they can make decisions and then pivot their business based on those decisions.
So are companies trying to handle this internally? Do they have specialists that really have the skill set? Is it somebody in supply chain that knows how to do this, or are they relying on their IT or their software or logistics side of their business to handle it, or are they outsourcing that to companies like Manhattan Associates?
Yeah, it depends on the size of the company. Large companies clearly have risk departments and they have uh, shoring departments that are making these contracts and figuring out the best place to get whether it's componentry or finished goods and where to import, et cetera. But smaller companies that are don't have that kind of structure around them need help. And I would say even the larger companies need help on the execution side of it. So at Manhattan, and just to be really clear on where we fit into this, we are not the consultants telling them what to do. We are the software enabling them to act on those decisions. So
Gotcha.
we often get involved with our customers in those, but it's about enabling the software to allow them to be more agile.
Okay, that
And
makes sense.
yeah,
So it's
yeah,
a solution that helps them, that has all of the necessary data and the tariffs for each company or country, and it aligns with maybe what their business and what products they need in their supply chain to manufacture the products that they ultimately sell, so that they can push a button when the tariff goes from 10% to 50% and then back down to 25%. Is that how it works?
or not even push a button, use AI to constantly be looking at that and determine what's the best thing. And basically, they can set their risk appetite. So maybe they cap a single country exposure at X%, or maintain, Y weeks of safety stock for this product, and Z weeks of safety stock for this product. But they're constantly looking at the trade information to figure out when they want to change those and adjust that risk appetite. But if they can set those parameters, then the software can go do it for them and set up all the shipments and the inbound and outbound flows.
So when you're talking to your clients and helping them with identifying the solutions, you said that you're looking at some of the company is really determining their risk appetite. What decisions have you seen from your clients that identify whether they're absorbing the cost of the tariffs versus passing that along, or absorbing, circumventing through strategy, or passing that along to the consumer?
Yeah. So again, that's changed a lot over the past year as well. So I think right after Liberation Day, even the companies that were well positioned for nearshoring, et cetera, everybody was expecting this was going to be fairly short term. And you saw a lot of companies treating these tariffs as if they were temporary, almost like a fuel spike, right? So they were running short-term surcharges, or, let's focus on cost control, and really avoid some of the irreversible moves like plant closures or major capex shifts. But now it's more clear that this is long term. So the ones that have started making those changes are kind of at an advantage right now. And we're seeing companies really build their operating model around those, multi-year long-term plans, knowing that, hey, this has started. It started in the U.S. in the Rose Garden on April 2nd, but now it's impacted global trade. And we probably, even if Trump changed his mind, he probably couldn't pull it back. There's been so much that's happened elsewhere. We've really moved away from that most favored nation trading to things that are truly country specific and putting their country first. And that's going to continue to make these tariffs and all of the deficits more and more um, irrational from month to month and quarter to quarter.
Yeah, I'm trying to just think about what sort of trade disruptions that we've had that really compare to this in the marketplace and in the supply chain. I can't think of when the last thing was really that impacted this on a global scale, that it wasn't just targeted to one specific, bilateral agreement, but that it was
Yeah.
a magnitude of this size. It's pretty big.
Yeah, it really is. And of course, supply chain in general was big in the news cycle back in the days of COVID, right? Then it was for a different reason. It was because it was a shortage of goods. People couldn't get components that maybe came from a part of the world that was shut down because of COVID. And if that was the only place in the world that component was made, you saw tens of thousands of cars that couldn't be sold because they were missing one chip. And we had those types of supply
Right.
chain problems. So I think there was a lot of focus then on multi-sourcing and fixing some of those things. But this has become the next test where we've seen, yeah, maybe we didn't get as far as we thought we did in multi-sourcing and nearshoring and creating options in the supply chain.
But then I guess from that, the chip manufacturing, it did really spark the investment in a lot of new manufacturing facilities that I don't know if those are yet online or to come online, but it was, yeah, I do remember that. So,
Yeah.
let's talk about some of the opportunities that you have where, like, you tariffs, you said winners and losers, but is there a competitive advantage for those companies that have said, you know what, we can see this coming down the pipeline, these aren't going away, we're going to double down and really take this to heart and see how we can do this? Like what advantages have been created because of this?
Yeah, it's a good question. I'm glad you say it because I guess I've been saying a lot of doom and gloom, right? Of all the troubles that this has caused and the turmoil that this has caused. But yeah, there are some clear winners, and there are some companies that have really taken advantage of these changes. I mentioned some of the people that were really set up to take advantage of nearshore producers. That's been a big opportunity. Also, brands that have dual manufacturing footprint, so they can rebalance volumes and win business from other retailers that don't have those dual manufacturing footprints. We've also seen a lot of companies using contracting and risk sharing as a differentiator. So suppliers that are using tariffs to introduce tariff index pricing or shared savings contracts. So in other words, if we can reroute through a lower duty origin, we'll split the benefit. So put the shared risk, shared reward in the way that they're contracting from all of their partners overseas. And that's deepened some long-term partnerships and locked in volume that used to be bid annually. Um, I think we're also seeing in some cases, specifically on retail and CPG, companies trying to really figure out how to use supply chain agility as a strategic advantage. I always say, because we're in the supply chain space, that supply chain software is mission critical. It's a differentiator, and if it's done well, it's a strategic advantage. And where we've seen that is with companies that are creating brand new, re-optimized flows, right? That are when a new tariff line or retaliatory measure lands, they can very quickly make adjustments to keep inventory on shelves, avoid stockouts, pass through price hikes if necessary. But in several areas, I think probably most in apparel, some in electronics, these tariff savvy players are using this to take price increases later and have them be a smaller effect because they're getting inventory to the right place at the right time, whether it's buying in advance of the next hike or moving things before the hikes change.
Yep.
So they effectively end up buying market share and getting brand goodwill during all of this shock that's happening. So I
Okay.
mean, I guess one way I say it is that while these tariffs have been, I mean, largely painful in the aggregate and difficult to deal with, they truly have rewarded some firms that were already diversified and truly data-driven and contractually sophisticated. And if you go back to why President Trump did this in the first place, right? It was all about trade deficits, and he wanted more people to buy American. He wanted more things produced in the U.S. Data doesn't show that that's happened yet, and I think that's because it takes so long to change these supply chains and build facilities. But there's no doubt that we didn't really talk a lot about the de minimis exemption. So for small packages, but just that one change alone had a very positive impact on a lot of apparel players that can now manufacture, still not in the U.S., but in other nearshore areas at a lower cost than in China. That is giving them a better ability to compete even in the U.S. markets. So I'm,
Okay,
I'm I'm trying to find the silver lining in all of this, and there
yeah,
is
well,
some
you
there.
you
Yeah,
think about the complexity of building an automobile and how the supply chain that comes around that and sourcing materials and parts and
yep,
to build a car, but apparel can pivot maybe a little more easily, and it's very labor intensive, and
yep,
maybe despite the fact that there is, high manufacturing or costs of capital investment, maybe the simplicity compared to the
yes,
automotive industry that
can
that explains
change
it.
faster.
Yeah,
Yeah.
it can pivot faster. Yeah, very much so. Um, so we hear every time we turn on the news, it's AI, AI, AI. How does that influence what you're doing and how the software really informs your clients to create stronger solutions?
Yeah, no doubt about it. You can't have a conversation about technology right now without talking about AI. Being in the software space, if you've paid attention to the software market over the past couple of months, it's been, the one of the worst periods for software ever in terms of, market caps and valuations for software companies just being killed. And it's, based on this narrative that AI is eating software. And, we've seen some things from Claude Code and others that are just showing that it's so easy to do things so fast with AI. Well, what does that mean for SaaS companies? Are they going to disappear? And right now, the entire software market has been being treated like the losers, right? They're assuming every software company is going to go away or at least be hurt severely by AI. Um, but I think what we're seeing in reality, and I think we'll see the market react to this shortly, is that there are definitely some software companies that may be a user experience sitting on top of a database that's very simplified, task oriented, that just isn't necessary anymore. AI can take care of it. But when you're thinking about deep domain expertise and layering AI into the decisions that are being made and into the risk that people are willing to tolerate and all the things that are done in a software like we do in supply chain, and we're one of many examples across many industries. I think there, the separation of winners and losers will be which are the companies that really embrace AI and embed AI into the way that the software is being used on a daily basis. Because there's no doubt about it, AI is allowing companies to move faster and do more. And this software discussion, this is another one, Noel. We could spend the whole hour talking about
Yeah,
this one. It's near and
great.
dear to my heart. But yeah, I think it's pretty exciting where we are right now in the AI space.
Okay, good. You know, our audience is coming into the business world here in the next year, in the next few years. What do we need to do to prepare them to digest the impact tariffs are having, the impact that software as a service is having, the SaaS solutions, and bringing that all together?
Yeah, I think I would sum it up. You've got to be agile. You got to be data driven. You've got to embrace AI. When I look forward of when it pick a number of quarters, months, years when it becomes clear who the winners and losers are in all of these spaces. I think what will differentiate the winners from the losers is the ones that were able to act with speed and certainty. And that speed and certainty comes from, at the core, you've got to have software that enables it, but that software also has to be, again, agile, data-driven, and embrace AI. And when you can achieve this, those are the ones that are going to end up being the winners. And I think that's true across whether we're talking about, all these companies dealing with tariffs, or we're talking about the software companies that are, looking at AI coming in, or if we're talking about the students and how they're excelling in their careers as they go into the market over the next few years.
Great, that's really helpful. Um, any other nuggets that you would think that would apply to students who are really passionate about international business and kind of that crossover when you think of the companies that you work for?
Yeah, I'd say my advice is, d dive in and say yes to every opportunity you can get your hands around. I think, it's fantastic that what the CGB is doing at the University of Texas to, create opportunities and create more awareness about global business. Happy to be involved in that, and I look forward to hopefully meeting with many of you and finding opportunities to help you achieve your desires and dreams when it comes to that first job out of college and getting involved in the global business.
Good deal. So I've noticed that there's some questions in the chat, Eric, and I was going to start selecting a few of those
Sure.
to throw at you. So for students interested in supply chain and global business, what changes in the industry do you think will shape supply chains over the next 5 years?
It's interesting. Supply chain has been slow to adapt compared to a lot of other industries. So when you look at the number of companies that are running their supply chain in the cloud today, and you can get different data sources for this. Um, but it's relatively low. Let's call it 40%. That's what one data source would tell you. And if you compare that to other industries and what they're doing in the cloud in terms of core systems, that's a pretty low percent. Um, and when I look at our competition in the supply chain market, we're really the only cloud-based software as a service company in this market. Others in this market have not invested the way we have. So I think AI, and because AI allows people to move so much faster in coding, will create new market entrants in this space. And some of the old players that we compete with today, we probably won't be competing with in 5 years. We'll be competing with companies that we haven't heard of yet. So I think we're kind of on the brink of some massive and very exciting changes.
That's great. Do you have any examples of companies that you've worked with that were especially successful in adapting to tariff changes? And maybe
Um,
any poignant highlights that you've learned along the way? I mean, I know I work with clients and I tend to learn from them as I'm delivering services to them, right?
yeah.
As I watch them. So I didn't know if you
So
had any that you wanted to highlight.
yeah, I'll give you some examples, but I'll be careful not to share client names because I don't have
Of course, of
permission
course.
to talk about these stories. But I mentioned we do work with a lot of companies across a lot of different industries. So everything from high fashion to sportswear manufacturers to drug manufacturers. But somewhere in the middle there, think about the big box. DIY hardware stores. You got a couple of big US brands, and then you've got maybe one that's slightly less known. It's also a US company, but you go into this company, you go into their store, and they have all the same tools that you can buy at the other two more well-known companies, but they're all about half the price. And the reason is they design and manufacture every one of their tools in China. So when the tariffs came in on April 2nd, their business model completely flipped, right? That it was completely broken. So they had this big decision to make of, are we going to continue to be who we've represented ourselves in the market to be and continue to offer these tools at a much lower price, or are we going to pass through these tariffs and now all of a sudden we're competing in a different space? And they made the decision that they're going to stick to their brand and the promise that they've made to their customers and continue to offer those prices. And we did a lot of work with them and helping them rethink their supply chain in terms of timing, where to put components. And because again, they're not just buying stuff from China, they are engineering, designing, manufacturing.
Wow.
But they also own all of that IP, so they can move the component manufacturing anywhere from a contract manufacturing standpoint. So it's been a major reorganization, but very impressive the way they've handled it. And I think the average customer of theirs wouldn't even know that anything changed. So I think that's kind of a great success story of a company that really stuck to their guns, didn't react, understood this was going to be long term, knew that it could be a temporary hit from a profit margin perspective, but also wanted to stick to the promise they've made to their customers.
It'll be interesting to do a case study on some of these companies and see and understand maybe some of the decisions they made early on and then how that impacted their financials over this year, following year, and then down the
Yeah,
road.
yeah,
I think time will tell. Very much so. Thanks for that. I love the stories that make things a little bit more tangible.
yeah.
So, I have another one for you. How are firms incorporating tariff volatility into their long-term capital allocation plans? Do you have any insights into that from the clients you work with?
Yeah, I think I again, this is going to vary a lot, but what we've seen a lot is it's another area where the volatility is bigger. So they've got to determine what their risk profile is. And you set the risk profile and then go based on that. But I think one thing that we have seen, in earnings announcements throughout the market over the past several quarters is lots of companies are making adjustments in those areas.
Good deal. Here's another one. As of early 2026, American SMEs, I don't know how we define that one, were forced to leverage many aspects of their operations and models due to tariffs. Are they considered winners and losers? How can they adapt and survive in an administration that emphasizes protectionist policies? Will large companies take advantage of the impact on SMEs?
SME, what?
I don't know what SME means in that context, but um, as an acronym,
I'm wondering if they meant SMB because they're talking about large companies versus small and medium business, maybe?
maybe.
I don't know.
Maybe we'll get an edit to that question there.
Okay.
Oh, hey,
Okay.
wait, here's Bill Leisure. He's a fellow board member. I'm going to read his question. There's been
Okay.
a lot of discussion recently about how AI has impacted the SaaS market, in many cases
Yep.
disrupting existing business models. It looks like and sounds like for Manhattan Associate, it hasn't been a negative disruption. Instead of reacting to AI, you're using it to deliver more value. How would you describe the impact of AI?
Yeah, so thanks for that question, Bill. And you're right. We have been leveraging AI in building our software for a few years now. I think one thing that's interesting is the market just became so aware of AI because of ChatGPT and some of these others, and it put it in the hands of consumers, and consumers can see how powerful it is. We've been using AI to generate code for a few years at Manhattan, and in fact, today about 80% of the code in our product is generated, as opposed to a developer writing it. Um, and we about a year ago we began putting embedding AI into the day-to-day operations of how supervisors and people use our software and leverage AI. So we are absolutely embracing and leaning into AI and making it part of how we add more value, and make our product and our software sticky with our customers. So I'm confident that in the long term, AI will make our product grow faster. We're a SaaS company that grows 20+% year over year in cloud revenue. I think that number will accelerate, and I've been pretty vocal publicly about that belief. Um, but right now, I think we're in this place where there is uncertainty around SaaS companies, and everybody has a story. And until we start to see those numbers come through in quarterly earnings calls, everybody's being penalized. So all of the software stocks are down. I actually wrote a piece, and published it about a week and a half ago. Maybe I'll put it into the notes here. I'll put a link into the notes if anybody wants to go and read it. But it gives a little bit more detail about how you can start to identify the winners from the losers, and what are the areas that make the winners more sticky and more valuable because of AI?
I like it. Um, there are a lot of questions coming in. I'm filtering through a few of these, but here's kind of a tangential one. You know, supply chains, you're talking about solutions in the cloud, you're talking about AI. What are the cybersecurity threats to both supply chains and all of the data that companies use in the cloud? And how do,
Yeah,
yeah.
cybersecurity threats that get accelerated or amplified because of AI, is that the question?
Yeah, around
Yeah.
tariffs and around supply chains and yeah,
Yeah. So, and we could do another one of these and spend another hour
I
talking about
know,
the
right?
AI cross section. But let me just give a brief overview on that. Because people throw around the word AI a lot and it means different things, right? So, are we talking about AI? Or are we talking about large language models? Or are we talking about agentic AI and autonomous?
AI, right?
And then there's all these different solutions where companies like Anthropic want to pull out your data and put it in a data lake and get all the data in the same place, and then perform AI on that and create all kinds of analytics that you weren't aware of before. Well, when you start with let's move all your data to a data lake, now you have something new to secure.
Mhm.
And then once you start performing functions on that, if you're going to do anything that is that is truly anything more than analytics, if you're going to take an action on that data, Now the data in that data lake is out of sync with your core system. So you've got to figure out how to get it back into your core system in a meaningful way. So all of these things create new security risks. Again, I'm trying to avoid going too deep into this, but one of the things that we've architected in our platform is we don't use data lakes for AI. So all of our AI is through standard API calls, the same calls that a user would use that's using our software, so that we can embed AI directly into the platform without creating any additional security vulnerabilities.
I like it. I like it. More questions about data leaks and AI. Everybody's worried about cybersecurity.
And anybody feel free. I know the Longhorn basketball team should have tipped off by now if anybody wants to put in score
Yeah,
updates.
yeah. Put that in the chat what the score is. Um, oh, here's a good one. How are companies using your platform, Eric, to run scenario planning?
Yeah, so what we've done with our, again, I'll take it right back to AI, with our AI agents is scenario planning can run continuously. And maybe I'll give you an example. So think about a warehouse that's got, 24 by 7 warehouse that's got, dock doors with inbound and dock doors with outbound. And you've got components and finished goods coming in and going out nonstop. Um, a supervisor is running waves, right? So waves of inbound and waves of outbound. And you've got to maximize what's going out because you want to load trucks that are going to then go drop off in a meaningful way. Um, so sometimes you get delays on warehouse floors because the right amount of goods, or you've got damaged goods, or the goods are still sitting on a truck in the yard, so you can't load this truck that's on the outbound. So you're either going to send a truck that's partially empty to get it going quickly, or you're going to wait some number of hours to get all the goods on it. That would make a more efficient run when that truck leaves the dock door. So our AI is constantly looking at all of that. So it's looking at all the data for everything inbound and outbound, knows where all the goods are throughout your entire system so that it can create those trucks and not start building a truck that's going to end up with end up with an issue an hour later. So that's just one small example on one warehouse to give you an idea of how AI can get actively involved on something that in the past you'd need a person to be looking at all these things and solving problems on the fly. And companies often will look across, maybe they've got 50, 60, 100 warehouse distribution centers across the country, and they rank them from top to bottom in terms of efficiency. And anytime, doesn't matter the customer, if you ask them what's the difference between the most efficient and the least efficient, they'll say the quality of the supervisor running that warehouse. And now
Okay.
with AI, every warehouse has the same top quality supervisor because we take all the learnings from that warehouse and apply it to all of them. So it's pretty shocking the impact that you can have in a short period of time.
Sounds really robust.
Yeah.
Quick score check. Longhorns are down 4-16. That
Okay. Sorry. I
minutes
asked for the
ago.
score update.
Yeah, sorry. I felt like I needed to say something, but it's okay.
Yeah.
It's only going to go up. Um, yeah, that's great. So, you know, I can't imagine that when you started your career, that you thought that you would be so specialized. One, AI as a word didn't exist.
Yeah.
We weren't talking about tariffs in the 90s, necessarily. So how did you get from the beginning of your career to where you are today? And how does that inspire you from a global perspective? Like, words of wisdom and nuggets for our eager students.
Yeah, no, perfect. Thanks for that question. So, I mentioned I graduated undergrad in 94. Moved to Dallas, started working in the IT space, and then a number of years later decided to go back and get my MBA. And during the MBA process, we did I think a 2 or 3 week trip to Asia and went and visited a few countries in Asia and visited several companies. The focus there was really about global trade and supply chain in all of these companies that we were looking at. And I went back and finished my MBA, but I told my wife at the time, if there's ever an opportunity to take an expat assignment and go to Asia, I'd love to do it. And I think probably within 2 years we moved to Singapore. And at the time we had three young children, so we moved there with our kids and lived in Singapore for 4 years, and then moved back to the U.S. after that. And a couple of years later, had the opportunity to move to London and run Europe, Middle East, and Africa. So throughout my career, I've been in the technology space. I've had the opportunity to live and work in Europe and Asia, and I think just bringing all of those experiences together have created a pretty unique perspective. And I would encourage all of you, as I said earlier, to say yes when you find those opportunities to do something different and exciting and get involved in something, outside of the US and experience something different, say yes.
I love it. Yep. Living and working abroad and helping to understand other cultures, other business cultures, other um, challenges that they have, infrastructure challenges, and many of the things that maybe we even take for granted on a day-to-day basis, like being
Yeah,
able to just ask for the basketball score to appear in the chat, and then it does, and that's
exactly.
great. Yeah, no, well, thanks for that. And I mean, I guess a little bit more specifically, as you start developing your teams and looking for the future leaders in your organization, what skill set do they need other than an open mind and resiliency and those things? But, what should they study up on or read?
Yeah, well, to begin with, I think all of you have one thing working in your favor. You're at one of the top schools in the country, right? So you get a lot of looks because you're at UT, and you get a lot of looks because you're at McCombs, right? So that creates a lot of opportunities and opens a lot of doors. And then with that, when you get those opportunities and those open doors, I think people are looking for people that are ready to learn, right? Nobody expects you to come out and know exactly what you're going to do and how you're going to do it. But people that are inquisitive, ask questions, humble, and ready to learn, and ready to roll up their sleeves, be agile, embrace technology, be data driven in everything you do. Those are things that I look for.
That's great. Wonderful. Well, I think that we've got some really great things that we've discussed this evening. I may try one or two more questions for you, Eric.
Okay.
Um, so is there, I have a question for something that maybe that didn't go as planned in your implementation or with your companies that you've worked for. Have there been any solutions that you've helped your clients implement that didn't have a positive outcome for them when they started working through their tariff response to the tariffs? So maybe
Yeah,
not
yeah.
your
That
implementation, but maybe
sure.
a
I think that always happens, right? If you don't have some projects that aren't going well, you're probably not pushing hard enough and going fast enough. But in fact, I had a conversation with a customer earlier this week. Now, fortunately, it was in a series of conversations, we're kind of on the back end of getting it resolved right now. But in the November timeframe, the customer was really upset because they were they had installed our software and kind of had regressed. Felt like they had regressed and things were less efficient. So we put a team on site to help them, make sure they really understand how to take advantage of the software. Because a lot of times when companies move from something that's maybe a software solution that doesn't have the features and doesn't have the capabilities that ours does. They try to use it the old way and don't understand, how to use the software and how to take advantage of it. So often when we have challenges like this, it's more of a training issue. And that was the case on this one as well. And we sent some people. This was a company down in Mexico. We sent some people on site with them to get them through the holiday season, make sure they learned how to use it. And now, this is, site one of 16, I think. And in November, it was the bottom of their list, kind of go back to that list of how efficient they are. It was at the bottom. And now today, it's the top of their list. So they want to go deploy across all the other sites now.
okay. All right, that was a great example for us. Um, One last thing is somebody has indicated that maybe going as a long-term expat, as you did with your family earlier in your career, isn't as prevalent because many companies have pivoted to business travel and a short-term, back and forth business trips as opposed to a long-term assignment. Anything that you would encourage this generation to think about as they look for an international um, experience?
Yeah, throughout my career, I've worked for large, medium, and small companies, and without a doubt, larger companies are more often investing in expats. So when I was an expat in Singapore, I worked with two different companies, actually EDS, and then while I was there, EDS was acquired by Hewlett Packard. Many of you are probably too young to know what EDS is, but it was a big technology company at the time. And then living in London, I was working for Dell. So large companies absolutely still invest because that's part of the talent development is to get people exposure to different parts of the world. Now, I would put Manhattan Associates as a medium, smaller medium company. We are not a large company on the scale of those others, but we've got a handful of expats around the world right now. So it is definitely still done. But yeah, you have to be selected. You've got to show the ability to grow and learn, and you've got to be somebody that the company wants to invest in because it's expensive for companies to do it as well.
I totally agree with you. I went early in my career, lived in Australia, and then throughout my career I pay it forward and I've just one of my team members is off in Zurich for 2 years. So
Yeah,
but she's as invested in it as I am and hoping that she'll get those experiences and come back and work back on my team again. But
yeah, exactly.
absolutely. Well, great. Well, this was a really informative talk. Thank you so much, Eric, for all of your insights. I could probably, finish watching the game with you, open a bottle of wine, and keep the conversation going. But
Yeah,
we're going to give everybody their evening back. And thank you so much, you guys, for being engaged and asking really great questions and helping us keep the conversation going. Really appreciate it.
yeah. Thank you all. Enjoyed it.